Recent military strikes involving the United States and Israel targeting Iran, developments that have unsettled the global oil and gas markets, leading to a surge in prices. Analysts say the instability has tightened supply and increased competition among countries seeking alternative energy sources. Since the conflict began, European gas futures have climbed by more than 60%, raising concerns among leaders across the European Union about possible economic impact. However, European officials insist the bloc will continue efforts to reduce dependence on Russian energy, a policy adopted after Moscow's invasion of Ukraine. Now, an economist, in person of Sopitan Segun, joins me now to explore the economic impact of the Iran war to world energy sector. Thank you so much for joining us. Now, the conflict involving Iran has already pushed global oil prices sharply higher, of course, due to fears of supply disruptions. How is this war reshaping the global energy market, and what immediate impact is it having on oil-producing and oil-importing countries?
Good afternoon. I think at the moment, it might be a bit premature to say maybe the global energy markets are being reshaped. This will be determined by how long this lasts for. President Trump has stated that he doesn't expect this to last for longer than 4 to 5 weeks. But if there's anything we know about war, it's you only know, the only thing you are setting up is when you start it. Nobody, not even the primary combatants, know when it will end. So if this extends beyond that time frame, then we will see significant realignment in the global energy markets, and I think that that it will portend a lot of serious, significant economic headwinds for people that export and people that import, energy resources alike. Nigeria, in particular, being caught in the middle of all of that because we depend so heavily on crude oil for our forex revenues, but also gasoline is at the heart of our local economy. So whatever happens to crude oil prices will definitely have a significant inflationary pressure on the Nigerian economy. But speaking about the global market, I think what we'll begin to see is opportunities for other players outside of the Middle East in terms of oil suppliers and gas suppliers. We'll also see, like you were saying during, as you were reading your bulletin, a resurgence of the impact and the influence of Russia, in spite of the sanctions, and the intentional reduction of emphasis on Russian oil and gas supplies from Europe. We will see, if this lasts longer than expected, that Europe might have to eat their words and perhaps potentially crawl back to Russia to fill up some of the deficiencies or the gaps that will be created by this instability in the Middle East. Nigeria, Angola, and other major oil exporting countries in Africa would have to look, to how to take advantage of this supply shortfalls if it lasts longer than is expected. So hopefully we'll see some benefits in that regard for Nigeria.
All right. Now, for Nigeria as a major oil exporting country, rising crude prices could mean high export revenues and even a stronger foreign exchange inflows. To what extent could this conflict translate into a fiscal windfall for especially the Nigerian economy?
So there are two variables that are involved in that, in us seeing any potential windfalls. As recently as 2 weeks ago, OPEC Plus has, seen, the rising conflicts in the Middle East had already taken a preemptive stance of considering increasing production quotas across, its members. So there's a possibility that, Nigeria's quota could go higher than the 1.7, 1.8 million barrels per day that we currently have. However, as we all know, Nigeria currently does not even meet that quota. So we're still hovering between 1.5 to 1.6 million barrels per day. So that's one variable, our ability to ramp up production and take advantage of whatever production quota increases OPEC assigns. The second variable is of course the crude oil prices itself, which we've seen skyrocketing. Just in the space of a week and a half, we've had a 40% rise in crude oil prices month on month, right? So from about $65 to the barrel to 92 as of this morning, dollars to the barrel, that's a significant windfall if we're able to take advantage of it. The challenge, however, is as we do get those windfalls that significantly improve our forex reserves and our forex revenues, maybe, who knows, even improve our exchange rates, there is a mitigating effect in terms of what happens to the price of petrol that the economy depends on very heavily. So while on the fiscal side, governments will enjoy significant revenue boosts, but will that trickle down and translate to improved welfare and well-being for citizens is a huge question that I think the answer is pretty obvious.
Now, when we look at Nigeria's oil production, it has struggled with issues such as theft, vandalism, and even under investment. Could these structural challenges, prevent the country from fully benefiting from the global oil price surge?
I mean, the good news you could say is in the last year and a half, we've had specific steps being taken by the current administration to address some of these issues, and we have seen some additional investment flows, into our oil and gas market, which has resulted in some of the improvements we've seen in production levels. If that effort is continued and ramped up, and we can boost our production levels, and like you say, reduce all of the smaller issues around what have you, then yes, we should be able to take advantage of this. But it's not something that can happen very quickly. Investments are coming in better than they have been in the last 10 years, but this investment will take time. It will take years, very many months, if not years, before you begin to see those investments translate into boost in production capacity. So that time frame certainly is unlikely to enable Nigeria to take full advantage of what's happening in the Middle East at the moment. So the only benefit we're likely to gain as far as this conflict is concerned is the improvement and increase in crude oil prices and what that does to our revenues.
Now, despite being an oil producer, right, Nigeria still imports a large portion of its refined fuel. Now, could the same global price surge that increases government revenue also push up petrol prices and inflation, especially at home?
Absolutely. Like I said earlier, apart from the fact that we still import a significant portion of our local consumption needs, even our locally refined petrol is still dependent on international crude prices, because the NNPC supplies crude to Dangote based on international oil prices. So whatever happens to crude oil prices, and as we know, just between last week and today, there's been a 200 naira. That's a roughly 25-30% increase at the pump price of PMS. If crude prices hit $100, as it's almost certain to do right now, then we would probably see petrol prices hit maybe 1,200 to 1,300 naira per liter at the pump, and that could be, I wouldn't say disastrous, but it will certainly have significant inflationary pressures impact on the economy. You will see prices, transportation prices certainly, and a lot of other components of the CPI basket that will have prices going up just because of the increase in petrol prices. So it's good news on one side, and it's very anxious news on the other. So we'll have to wait to see how much of the inflationary effect of higher pump price of petrol we can mitigate and prevent from disrupting the gains that we've had in the last year or so with regards to macroeconomic factors in Nigeria.
Now, looking at the longer term, could prolonged instability in the Middle East actually hurt oil exporting countries like Nigeria if global economic growth slows and energy demand eventually falls?
Well, the economies that Nigeria tends to supply with crude are large and heavily industrialized economies. India being one, the United States of America being another, and then parts of Europe. So even if this goes on for longer than one hopes it will, I don't think that we'll see the types of disruptions, for example, that we saw during the COVID-19 shutdowns. And therefore, yes, there might be a reduction in demand for energy over time, but I'm not sure that such reductions would significantly impact our fortunes in the market, especially considering the supply gaps that the war in the Middle East is already creating. If the war continues as we're seeing now, then those gaps will only get reinforced, which means that those gaps would have to be filled, by other players in the market. And so exporters like Nigeria and others would be able to, hopefully shore up that gap and take advantage of the situation. So I don't see too much of an effect with regards to demand for oil and gas on the long run because of this war.
All right, thank you so much for having this conversation with us.